Hey everyone, in this episode I'm going to be covering 5 money-making property investment strategies you can do while working a full-time job. You can do this on the side and won't take you much effort at all, okay? So if you're looking to build some wealth using property investing, but you don't want to become like a full-time developer, these are some little known or less well-known strategies that you can learn about and you can implement. So at the end, I'll actually cover a sixth strategy, which is a little bit more complex. So if you're sort of feeling a little bit, want to take a little bit more risk and multiply the return, stick around to the end of this episode and you'll get a lot of value. So my name is PK and I help people build passive income through property investing using data without having to drop $15,000 on a buyer's agent. And really this channel exists to help you guys get ahead through Australian real estate. And I'm grateful for each and every one of you who follow this channel. If you get some value out of this video, if you got value out of previous videos, hit the subscribe button, turn the notification bell on, give it a thumbs up, right? The previous video I did, if you want some inspiration, was with a client of mine named Dave. Go watch that if you're looking for inspiration, real stories. But in this video, I'm going to be covering 5 plus an additional at the end, 6 strategies of how you can make money. Let's get into it. So look, the first strategy is probably the simplest of all, and it's just a really tax-effective strategy. So what this is, number one, if you buy a principal place of residence, so a principal place of residence is where you call home, all right? And you live there for 6 months, you live there for 12 months, you live there for 18 months, a short period of time. You can actually then move out of that principal place of residence and rent. Okay, so you can rent and have this as an investment property. It was a principal place of residence before, now it's an investment property. You can actually have this as an investment property for 6 years, and then if you sell it, you don't pay any capital gains tax. Okay, so normally in Australia, if you hold a property for more than 12 months, if it's an investment property, you have to pay, like 25% capital gains tax. It's normally 50% of the capital growth or capital gain. You get a 50% discount. If you hold it for more than 12 months, it becomes 25%, just to use a round number. Okay, but if that was your principal place of residence, even though then afterwards it was a rental property, an investment property for 6 years, you can still avoid paying the capital gains tax. So this is relevant because any of you who want to make the most of the property boom, you're still renting, and at some point, you want to buy a house, but you quite enjoy renting, all that kind of thing. You don't really want to go move out, beyond your apartment in the middle of the city or whatever. Go and think about the strategy. If that property goes up $50,000, or let's be more realistic, if you buy a $300,000, $400,000, $500,000 property, and in 6 years' time it goes up by $300,000, $400,000, $500,000, $600,000, which is entirely possible, you get that tax-free when you sell, okay, if you implement the strategy. So that's number one. And as I go along, guys, if you want me to do more episodes on diving deeper into any of these 1, 2, 3, 4, 5, or 6 points, leave 1, 2, 3, 4, 5, 6 in the comments below, and I'll use that as collateral, as ammunition, as feedback to do more of these episodes on that specific strategy. So the number one strategy is move out of your principal place of residence for 6 years, make it an investment property, and still pay 0 capital gains tax. The second strategy is to buy, renovate, and sell. Now, I see that not many people actually do this right, and the reason is they think that you need to demolish a wall, you need to add a bedroom, you need to add a kitchen, you need to spend $50,000, $60,000, $70,000 on making this work. In reality, it's not as difficult as you may seem if you keep it to a cosmetic renovation. Cosmetic renovation effectively just means that you're not ripping down any walls. So I'll give you a free suburb. Last year, at the start of last year, 2020, we were investing in a suburb called Mermaid Waters in the Gold Coast, and you could buy an apartment there in Mermaid Waters for mid 200s, right? And you could put new flooring in that apartment, lick of paint, maybe resurface the bench tops in the kitchen, replace the faucets, all stuff that you can do from Bunnings or outsource to a property manager who'll project manage the entire thing if you're interstate. You can do all this for less than $10,000-$20,000, and a renovated apartment in Mermaid Waters would be going for mid to high 300s. So you could buy at 250, sell at let's say 380. That's $130,000 of profit. Let's say that took you a month to do, which is not an exaggeration. After all selling costs, you're still making $60, $70, $80,000 of pure profit. Okay, these strategies I genuinely feel aren't sufficiently explored by the everyday property investor, and we go through that in module number 6 of the Property Investment Accelerator. Okay, that was number 2 strategy. Number 3 is really interesting. You can combine number 1 strategy and number 2 strategy. Okay, so what you can do is you can buy a home to live in there for 6 months, 12 months, something like that, then make it an investment property. Remember, you have then 6 years to sell it without paying any tax. And then, in that second year or that third year or that fourth year or that sixth year, you can do that same renovation technique. You can do that same renovation method. And instead of making $400,000 on the growth when you sell it, you can make $500,000. You can make $600,000. Yes, you need maybe $10, $20, $30, $40,000 of cash to renovate that sort of thing, but you can make so much higher return on investment. And remember, when I'm talking renovation, I don't mean that you need to be nailing in all the nails, you need to do all this stuff, nor do I actually mean that you need to be calling tradespeople and figuring out the project management. All of this can be outsourced to a really reliable property manager, and most of them for like $500, $1,000, they already have a book of all the handyman, the tradespeople they can rely on. They'll project manage it for you, especially it's a cosmetic renovation, and that's basically low effort for you. You're in your banking job, your accounting job, you're doing your IT work, or whatever occupation you have, nurse, doctor, you can continue to do that and just make money on the side like this. Okay, so number 3 was combine the tax saving strategy of number 1 and the cosmetic renovation technique of number 2. So that was number 3. Number 4 is options. Okay, options aren't something that I've done a lot of, but what you can do in options, especially in this kind of rising market, is let's say I found a brilliant property, right? Let's say I found a really good property in a growth suburb, call it $300,000, $400,000, $500,000, whether it's in my hometown or somewhere else. You can give the vendor perhaps $10,000 or $20,000 for the right to, but not obligation, to buy that property, let's say in 6 months' time, in 12 months' time, in 18 months' time. So many different things you can do, right? And it might work out for the vendor because maybe they do want to sell, but maybe they want to rent that back from you because they haven't found their next property to buy, to move into. That's quite common these days because there's not that much for sale. So a lot of people want to sell their properties but continue renting them until they've been able to find a new property. Or there may be some other situation where the vendor is happy to accept an option where you're basically paying $10,000 or $20,000 for the right but not obligation to actually execute that transaction and buy that property in 6 months, 12 months time, or 18 months time. The beauty about this is that you've just paid $10,000 or $20,000 and you are riding that wave, right? That asset, even though technically it's not yours yet, you have the right to buy it. Okay, and you set that buying price at the time at which you get that option locked in. So let's say you found a growing suburb, let's say in Brisbane, Stafford Heights, I'm just making that up. And looking at the data that it's going to carry on going up. You can lock in that option at a price. You can pay $20,000 for the privilege of doing so. And that's attractive to the vendor because they have $20,000 cash and that's still their house for now. And then you can ride that wave, and in 18 months' time, you can settle on that option And by that time, that property has gone up $100,000, $200,000. You've been the beneficiary of that rise, and in the whole time you haven't had to put much of your cash down. You haven't had to buy that property. So it's like making money. It's like unlimited return on investment. It's like making money without actually having to put any money down. And then in the future, if you want, you can just sell it, right? And you sell it before you settle the property, and you've made $200,000 with literally no money, with $10,000 or $20,000. So that's strategy number 4. Strategy number 5 is very interesting. Vendor finance. So vendor finance simply means you can ask the seller, the vendor, to actually finance, some due diligence work or some construction activity, or even other bridging loans, or what have you. So actually what you can this is kind of a little bit really interesting. You can buy a property, renovate it or subdivide it, or do something to the property that's funded by the vendor, right? You don't need any cash for this. And as you add value, let's say you combine strategy number 2, which is renovate, and vendor finance, strategy number 5, you can actually buy that place, renovate it, sell it, all with the vendor's money, right? And so you've made, $100,000, $200,000 with none of your own money. Like, if you want more videos on these types of things, comment number 5, because that's, it's a can of worms. So I'm just introducing it to you guys at this moment. And then number 6, if you've watched right till the end, is combining number 4 with number 5. So combine options with number 5, vendor finance. So you can actually get that property on an option, the right to, but not an obligation to settle or buy that property. And then you can get the vendor to fund any subdivision work, or you can get the vendor to fund any townhouse development work, any value add renovation work, anything that you're doing to the property. You can get the vendor to fund it. So remember, you've not put in any money except for the price of the option, $10,000, $20,000, and you've added value to that property, and then you can sell it, all with the vendor's money, right? And that way, because it's under an option, it's lower risk. If the vendor pulls out or if it doesn't work, you don't have to actually carry on with the transaction. Remember, an option is the right to, but not obligation to actually follow through. And what's in it for the vendor, you ask? Well, when you sell it, you oftentimes have a JV agreement where they might take 10, 20, 30, 40, 50% of the profit. So all of these things you can actually do without leaving your 9-to-5 role. In fact, most property developers, most sophisticated property investors, they build up their wealth, they build up their net equity, net assets, and passive income while still working. And when that asset, or when that wealth or income gets to a certain point, that's when they say, all right, well, I don't need to work anymore. I can just continue doing more of this. So I talked about 5 plus an additional 5 strategies that you can execute right now in this market to make money through property investing without leaving your job, without leaving your 9-to-5. And if you want to hear about any of these in more detail, number 1 is moving out of your principal place of residence and renting it out for 6 years, paying no tax. Number 2, buy, renovate, and sell. Number 3, combining number 1 and 2. Number 4, options. Number 5, vendor finance. And number 6, combining options with number 5, which was vendor finance. If you want more detail in any of these 1-to-5, 1-to-6, list that number in the comments below, 1, 2, 3, 4, 5, 6, and I'll do more episodes on that specific strategy. Guys, if you want to step up your learning, join my free Facebook group, comments below, join the podcast, you listen to the podcast, all that stuff is in the links below. And please don't forget to subscribe, turn the notification bell on, and hit the like button. So thank you so much for being with me. My name's PK, and always remember, the most important real estate is between your 2 ears. The 6 inches within your 2 ears will get you financial independence. Catch you later.